FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's April 2nd, 2019. Well, you're always looking for a market edge. You're always looking for a way to try to predict or get away from the trend or get to the trend before it happens. Imagine being able to see next month's financial results in a newspaper today. Well, we can't do quite that well, of course. That would be a kind of back to the future type endeavor that we're just not capable of now. Probably everyone would be doing it, and there would go your ability to profit. The fact that not everybody can do it is what makes it profitable, potentially profitable for you. Well, anyway, as always, email us with any questions, comments, and be a part of the show, kl@kerrylutz.com. And so right now, got somebody who's a ace forecaster, market timer, has been acknowledged as so. His name is Steve Rhodes. Steve, you are author of Mastering Probability, which is a daily newsletter service, and it's all about timing, right? Like everything else in life.
Absolutely.
Yeah. So how do we do it? How do we become market timers, effective market timers? To some extent, everybody is a market timer, but usually not a very good one.
The question, how do you do it? I think I can tell you the way that I did it. And the way that I did it was simply, I immersed myself in different sets of tools. I took the works that other folks did and found ways to make them better. And what I mean by that, Kerry, was that certain tools which would identify where a market should turn, they wouldn't turn there. And I went back and said, well, what is it that maybe was missing? And so I found some of those missing ingredients. And specifically, one of the things that I utilize at the completion of different patterns, because I'm a pattern recognition individual, master expert, or what have you, I'm always looking for the market to communicate to me when that pattern is complete. And the way that it does that is it generates either a bullish or bearish reversal candle. So I'm referring to Japanese candlesticks, but I don't use Japanese candlesticks in the middle of moves out there. I only look for these candlesticks to occur at the completion of a certain pattern that my system looks for. And that's one of the ways to allow the market to communicate to us when the turn may or should be occurring out there.
Mm-hmm.
As an example, right now, what's present for today and what I'm watching for is the Dow equity futures. And that's where my focus is, because I believe that's where the next message comes to us, because the Dow has in effect been in the Dow equity futures, and you can see the pattern there more easily than you can in the cash indices. And it's been in about 1,000-point consolidation that began February 13th. And it's right now at the top of that consolidation. So we're either going to see a breakout, and that would mean a close above 26,280. The Dow equity futures close above 26,280 and then stays above that level. We should see a move to 27,380, give or take. Mm-hmm. Likewise, we're at the top of this consolidation. It's very possible that the extent of the rally ends right here. Now, when I say ends right here, it just stays within this consolidation, and we then see a move back to the 25,260 level, this 25,280 level out there. And if there's a break to the downside, then we're looking at 24,229. And consolidations are easy patterns to identify and spot. So for me right now, as we speak, it's all about the Dow to give us the next signal.
Okay, so it could be over, it could go further. What about longer term? You mentioned pre-call that there's a certain indicator, if you will, that every time you see it sends shivers up your spine because it always predicts a recession, a down market.
It not so much a recession, but it's a pattern that's been present since 1896 before every bear market. And when I say bear market, I'm just using the standard terminology of a 20% decline or more, not necessarily end of a bull market, but just simply some type of correction. And that pattern was in place back when the Dow, the S&P were making their highs, and the Dow specifically back in the October 3rd, October 4th timeframe. And that pattern was present on a daily time frame, a weekly time frame, and a monthly time frame. And that, in fact, led to a 20% decline, going back into 20% or more decline into those lows on December the 24th and 26th out there. That pattern's not present right now, but it could form as price moves higher. I just have to wait for that to unfold. But right now, my signals say, watch this 26,280 Dow equity futures. If we get a close above that and price stays above that level, expect a run to the 27,280-ish type mark out there.
So what about the economy in general here? Any particular insights you have that can help you to understand better where we're at in this cycle?
You know, I think that one of the things that's talked about a lot right now is the inverted yield curve. And for me, I think you have to go study what's going on inside the Treasury market and pay attention to how they're moving in terms of euros, yen, and pounds, the major reserve currencies of the world out there. And I think what we're seeing here, or at least what my data shows, is that the Treasury market we're seeing a rush of capital coming out of Europe into the U.S. And so I don't think that the inversion that we've seen is a signal that we're going to see a recession inside the United States. I think it's just as important to understand the flow of capital from around the world, because if you track instruments, you'll see that when gold has a sustained rally, as an example, you will see it moving higher in all major currencies, because we're in a one world market. And so traders in their local currencies need to see an asset rising. And if so, they'll continue to invest in it, momentum traders and so forth. The same thing holds true for bonds out there and any instrument in the Dow. In fact, the Dow, as an example, made a new all-time high priced in euros yesterday. And that suggests to me that we will eventually get back to the all-time highs and likely exceed them as well.
Mm-hmm. Yeah, well, that's kind of my gut feel too, for other reasons. So do you look at any fundamentals at all, or is it just, technical?
It's a great question. It's a great question. So a little bit about my background. I'm a CPA, so I'm a licensed CPA. I don't practice that, but so you say fundamental. I've been a CPA since 1980. And so I used to fundamentally analyze every stock holding in my portfolio. At one time, 100 individual stocks. And I would go through all of the SEC filing requirements and take a look at the balance sheets and the cash flow and read the MD&As. And what I learned was that the most fundamental aspect of trading and investing was understanding what shareholders were doing. And by reading all that documentation, it wasn't telling me the most fundamental thing about my investments. And that's really what led me to what people refer to now as technical analysis. But for me, technical analysis and taking a look at a stock chart and using the set of tools that I use helps me understand what buyers and sellers are doing. And to me, that's really what it's all about. more than anything else.
Yeah. So it's sentiment, it's flow of funds, I guess, have an important bearing on this as well.
Yeah, the global flow of capital, the flow of funds is really important. When I started taking a look at different instruments, take for example Bitcoin. When I started looking at Bitcoin and pricing all of these currencies, you could see it all moving up at the same time. So you could see these traders around the globe, each person in their local currency was moving higher. Of course, it was going to continue to move higher. And then you can watch it fall off the cliff. And it was doing so in all of the currencies. And so the same thing. So, when I take a look at the Dow making a new all-time high price in euros yesterday, if you go back historically and take a look at the Dow price in both dollars and euros, I look at it in yen and pounds as well. But just to make it simplified here, just look at it in euros, you will see that a top inside the Dow price in dollars does not top out in euros first. They're both going to be at new all-time highs at the same time before the next type of a top comes in. So yesterday was a very promising longer-term element about where the Dow is, price in dollars is eventually headed because of that new all-time high in euros.
Interesting. So it tells you that there's money coming from Europe. Is that what it's telling you, or
yes, absolutely. It's coming from Europe, and when you start looking at these charts side by side of these instruments, major instruments priced in these major currencies out here, all of a sudden it's this light bulb that goes on, and of course it makes sense. It made all the sense in the world. Of course, our brothers and sisters, so to speak, over in Japan or over in London or over in anywhere in Europe, they're always taking a look at their instruments priced in their currency and instruments. And so, for example, most people don't realize this, as great of a return off of the 2009 lows that we've had in our markets, it's nothing compared to if you were a euro trader. A euro trader in the Dow since the 2009 bottom has outperformed the Dow priced in dollars. And the same holds true for yen. The same holds true for pounds out there. So looking at instruments priced in these major currencies is really important. That's a fundamental thing to look at.
I can totally understand that. And so do you follow commodities or any other markets that are noteworthy?
I do. I certainly follow the gold market and in commodities in general, because I'm looking for commodities in general to form some type of solid bottom as the next, as one of the next great longer term investments. But I'm always tracking gold and the miners out there, but coffee, other commodities, sure. I follow those.
Yeah. So what about metals? What are you seeing there?
So in metals, specifically right now, we're sitting here at a key level of support, which specifically is, in essence, where we're trading right now, about $12.94. And if gold's able to hold this, then we continue to make these higher bottoms. So just a simple thing out here that it appears that gold made a important bottom back in 2016, and we continue to make these higher lows. And if gold can hold this 1292 level, then we should see another run back to the most recent high. So, and the reason why I take a look at what's going on in gold, and I look at that in all the currencies as well, is the best way to play it. If gold is forming some type of bottom, the mining equities outperform anywhere between 2 to 5 to 1. So when folks are trading gold and they spot some type of tradable bottom, they really should also be looking at really making an investment inside the mining sector. Because if it's a bottom, the correlation between the two, the mining sector itself is going to outperform.
Interesting. So you think we're going to see some movement on that front, huh?
It's the pullback out here that we've seen since I'm just talking about now over the last week and a half, has been simply a pullback to support. So if gold's able to, I would say that as long as gold doesn't close below 1288.30, then this uptrend continues. If it does go below that level, 1288.30, then we're looking at the move. I was going to try to do this here. I can't do it on the fly.
Yeah.
But I would say it would be a move equal to 1356 minus about another 100-point move, 100-point move lower.
100-point move lower, yeah, if it breaks.
Yeah, if it breaks. If it breaks.
Sure. So 1280, that's the magic number, eh?
My magic number, 1288, but you got to give it a few bucks.
Yeah, sure. Nothing is perfect, right? So, yeah, so interesting. Any other markets you see that are flashing signals, Steve, that we should know about?
I guess at this stage here, what I'm watching for, because we're in this longer term consolidation market, and until we break it, it always means that if you can't bust out the top of the consolidation, you can go down to the bottom. So we were taking a look at a shorter term time frame for the Dow. There's a longer term consolidation inside of the Dow as well. And so therefore, I'm watching the other markets. What's the S&P 500 doing? What's the NASDAQ doing? All of the markets, all of the main stock markets here in the U.S. And so I have some key levels that I am observing inside of the ES Mini as an example, to track the S&P 500. And to give you an idea for the levels there that folks should be watching, the longer term levels are 2885. That's really, I'm looking at that from a quarterly basis. In other words, if the ES Mini closes above that, we're at least going to go past the all-time high, and more likely we're going to get up to about 3,100 would be the price target. The other level, the other confirming level I'm looking at is 2892. These are levels that should hold as resistance. So again, that range 2892 to 2885. If the ES Mini closes above that, that tells me that it's ready to make its move back to its all-time high, and then a little bit beyond that as well. Otherwise, that's significant resistance up here. So we're really getting close to an area where the market's going to communicate to us its next move.
Okay, so we're a little uncertain now, but your gut feel is it's going to go higher.
Longer term, yes. The key, and it's really, the Dow is kind of like the trophy horse, so to speak.
Right.
And so I'm really watching that trophy to see where that next piece of information comes from. So shorter term, we're watching a shorter term consolidation, and longer term, it's really the highs of 2018, but really beyond that, just that you can draw a little trend line. You have to give things a little bit of room out here. So even if the Dow takes out its all-time highs, it's still going to need to do so. It's going to need to be probably a 500-point move beyond the highs, the all-time highs, before it gives us any signal of an ultimate breakout. But if the global flow of capital continues to move towards the U.S., and there's no reason to think that it won't at this stage of the game, that's the put. People talk about the Powell put. The real put is the Euro put out here, where people are just simply trying to get their money out of Europe and into the U.S. So we've got a strong U.S. dollar. That's up another 246 ticks this morning. You got the dollar higher. You got bonds higher. That just tells you and I that capital is fleeing Europe and coming here to the U.S., or at least that's what it tells me. Right.
Gotcha. Interesting. So,
and that's kind of the fundamental aspect of what, when you ask me a question, is there anything fundamentally that I look at? I think that understanding where, the old Jerry Maguire, show me the money.
Yeah.
To me, that's the fundamental element of it, right?
Yeah. Hey, well, look, we can talk all we like, but until you perform, which you have in the past, you've gotten some awards too, haven't you?
Yeah, I was named the 2018 Market Timer of the Year by the folks at Timer Digest, and was number one market timer for the S&P 500 and for bonds, and they also track gold. And I have been number one there, but when the end of the year, I was number 5 market timer for gold. And so what's really great is just I utilize these tools, and I utilize them for all time frames. A chart, I'm agnostic to time. It's just really the chart patterns. And so this set of tools that I use works for whether you're trading a 30-minute chart and trading the equity futures, or maybe you're just trading treasury futures, whatever it is that you might trade. And the reason why I mentioned futures is because as a technician, for me, I want to gather as much information as I can. So it's much easier to do that for the patterns that I trade versus the cash markets.
Mm-hmm. Mm-hmm. So you've got a lot of monitors on your desk, don't you?
I do have a bunch of monitors.
Yeah, you can't have enough. You have to get one of those 49-inch curved monitors where you can put everything up there.
Yeah, but you got to have just the right amount of information because you don't want to be able to. You don't want to have overload.
You don't want information overload.
Stop you from because it is really all about having confidence, knowing your system expectancy, and setting up to take the trade. How many times, each of us when we go shopping, we love buying things on discount. We don't hesitate, when that pair of pants or shoes or what have you is on sale. Yeah. But when the stock markets start getting on sale, it's nice to be able to have a signal. And so it's nice to be able to utilize these tools to be big from an emotion standpoint, but just utilize these tools to see the emotion of the market change. And that's really what I do. And then you just have to have the confidence to go ahead and pull the trigger, so to speak. But always use stocks about managing money. Mm-hmm.
So, hey, when you're not busy forecasting markets, what do you like to do?
I love to golf.
Okay.
I love to golf. I live on the water. So I live in South Florida. I live in Delray Beach, Florida. And I'm very fortunate. I've got the intercoastal on my backyard. Sure. So fishing or golf or doing something outdoors, that's walking on the beach. That's a great way just to chill out, so to speak.
Yeah, well, I'm only about 35 miles north of you, so I know exactly what you're talking about. And outdoor living, although outdoor living is a little tough in the summers, a little hot, a little sticky, but the rest of the year, it's heaven on earth. Hey, just tell us again, Steve, where's the website? Where do we find you?
So masteringprobability.com. I provide folks with a free 30-day unconditional money-back guarantee trial of the newsletter. It contains a lot of education, so I have maybe 4 or 5 different archived 1-hour archive workshops that allow individuals to really get a sense of the tools that I use. And again, masteringprobability.com.
All right. Masteringprobability.com. It sounds like a fascinating site. I like the fact you've got a holistic theory that goes cross markets. Some people say, well, this theory will only work on the Russell 2000 stocks or only on the Dow transports or the utilities. Yours crosses markets. It crosses different, whether it's gold or currency, or I guess oil too. You can oil come too. Up.
Absolutely.
Yeah. So I like that it crosses disciplines, multidiscipline theory. It's a great thing. Hey, questions or comments for Steve Rhodes or myself, email us, kl@kerrylutz.com, Twitter @KerryLutz, and Facebook Financial Survival Network. If you are listening on a podcast or you are listening on YouTube, and that probably encompasses all of you out there, then please subscribe on that platform, like it, and share it with your friends so information like that you just heard from Steve can get out there wider to people who really need it. Steve, it's been an absolute pleasure. We'll talk to you again real soon. Thank you so much.
Sounds great. Thanks for your time. Have a great day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.